of financial system. Financial system is an economic agreement wherein financial institutions facilitate the transfer of funds and assets between borrowers, lenders, and investors. Its goal is to efficiently distribute economic resources to promote economic growth and generate a return on investment (ROI) for market participants. The market participants may include investment bank, stock exchange, insurance companies, individual investors, and other institutions. It functions at corporate, national, and international level and is governed by various rules dictating the eligibility of participants and the use of funds for different purposes.
The primary purpose of this paper is to evaluate a realistic financial industry study entitled Aeon Credit Service Berhad for 2 consecutive years for 2021 and 2022. Among the crucial components in conducting financial system highlighted in this research are profitability ratios, liquidity ratios, and capital adequacy for both years. The purpose of this research is to assess the periodic operating result and financial status in the Aeon Credit and how efficient Aeon Credit will distribute economic resources to promote an economic growth and generate a return on investment for market participants. In general, Aeon Credit showed an excellent performance with many improvements occurring in 2022 compared to 2021. If viewed from a different perspective, loan to asset in liquidity ratio, Aeon Credit shows that the rate of money lent and its liquidity is low. This indicates that Aeon Credit is experiencing less risk in 2022 compared to 2021. This proves Aeon Credit has worked hard to distribute economic resources efficiently as well as generate return on investment for market participants.
On 6 December 1996, Aeon Credit Service Berhad was incorporated and converted into a public limited company on 9 February 2007 and subsequently listed on the main market at Bursa Malaysia Securities Berhad on 12 December 2007. The address for Aeon Credit Service Office is at Level 80, UOA Tower Corporate, Avenue 10, The Vertical Basasov, Number 8, Jalan Kerinci, Kuala Lumpur, Selangor. The credit began operation in 1997 by offering a simple payment program for consumer purchases of durable goods through designated retailer and the chain stores. Today, the company's business has grown to include credit card insurance, concession payment, car financing, personal financing programs, insurance brokers, and other service. The company has 5 regional offices and 64 branches and service centers located in major shopping malls and cities.
Financial statement, financial information and data is used by investors and financial analysts to analyze a company's performance and forecast the stock price in the future. So one of the most important sources of reliable and audited financial data is the annual report, which includes the financial statements of the company. Financial statements are records that show a company's operations and financial performance. Usually, government organizations, accountants, companies, and others related will audit financial statements to ensure accuracy and for financing or investing purposes. Financial statements include the balance sheet, income statement, and cash flow statement. Balance sheet is a summary of the company's assets, liabilities, and equities. Next, the revenues and expenses incurred by a company during specific time period are the main focuses of the income statement. The statement generates a profit figure which is known as net income for a company after the expenses are subtracted from revenues. Lastly, the cash flow statement shows how effectively a company generates cash to cover debt payments, operating costs, and investment.
Profitability ratio. This ratio measures the combined effect of liquidity, asset management, and also debt management on overall operating results of the firm. Here's the calculation for profitability ratio in Aeon Credit Service Company. We have profit margin, return on asset or mostly known as ROA, return on equity which is known as ROE, equity capital ratio and asset turnover ratio for year 2021 and 2022. In the previous slide, I already showed you the calculation for the ratio. So now I'm going to give a comment for each ratio. I start with profit margin. For profit margin, it measures the amount of net profit earned from its operating revenue. Graph shows that there is an increasing by 8.12%. Return on asset, ROA. This ratio measures a firm's overall return on all of its asset investment. ROA indicates the productivity of assets in producing revenues and the firm's ability to control costs in its operations. In this graph, we can see that there is increasing of ROA by 1.3% compared to last year. Return on equity also has an increasing by 4.1%. It shows the firm has ability to indicate higher return to shareholder. Next, we proceed to equity capital ratio. Based on the graph, equity capital ratio in 2022 is higher as 21.69% compared to 2021, which only 18.5%. Lastly, we have asset turnover ratio, which measure bank's efficiency in utilizing its asset. The company gained more 1.77% higher than last year. So, with all the calculation and comparison for each ratio, we can see that on profitability, the SCSM is generating more profit as compared to a year before. It shows that the firm is able to generate high returns, which brings better growth prospect for the company. This is because the company performs quite well based on profit margin. This could be due to efficient management of cost of goods sold and good operating expenses. Furthermore, its return on equity is higher than last year, in which it can generate a profit of 16.5% as compared to last year, which is only 12.4%. If ROE increase, investors will be attracted to invest more.
Current ratio attempts to match the firm's assets that are reasonably liquid in nature to the firm's short-term liabilities. As we can see in the table here, for 2021, it shows that Aeon Credit's ability to pay for RM 2 ringgit for RM 1 ringgit of its short-term liabilities. In the meanwhile, for 2022, it shows that Aeon Credit's ability to pay RM 3 ringgit 20 cents for RM 1 ringgit of its short-term liabilities. It is proven that Aeon Credit has the better financial position of the company in the 2022 than 2021. Loan to total asset ratio measures the total loans outstanding as a percentage of total asset. The higher this ratio indicates a bank is loaned up and its liquidity is low. The higher the ratio, the more risky a bank may be to higher defaults. As we can see, based on the above ratio for Aeon Credit, it shows that the ratio has decreased from 81.50% in 2021 to 78.31% in 2022. This indicates that Aeon Credit faced less risk in 2022 as it has a lower value.
The capital adequacy ratio is a percentage of a bank's risk-weighted credit exposures that indicates how much capital is available to it. So the purpose is to show that a bank or financial institution has enough capital on reserve to handle a specific amount of losses before facing the risk of going insolvent. To calculate the capital adequacy ratio, we need to divide equity capital by total assets. And the result for 2021 is 18.5%, while 2022 is 21.7% for this company. Based on the ratio, it increased by 3.2%. So the higher ratio is better. It shows that this financial institution has enough capital to cover a reasonable amount of losses before they become insolvent, and also they have ability to protect its depositors and shareholders. So Aeon Credit is considered as safe and likely to meet its financial obligation. In conclusion, every bank and financial institution will face several types of challenges and risks related to financial performance. So it is important for them to know the effective and efficient way on how to manage, control, and handle all the risks well. And they also need to have strategies to improve their weakness and based on the analysis that have been made to grow their company in the future. So based on the financial ratio results, it shows that the firm has a better improvement in 2022 than in 2021. From the profitability, liquidity, and capital adequacy ratio, the Aeon Credit has shown positive results, which mean they manage the financial matters either in terms of asset, liquidity, and others well. And maybe they also have planned a good short-term and long-term strategies that affect their finance to be better and more efficient.
So next, about the recommendation based on financial ratio results, it shows that the firm has a better improvement in 2022 than in 2021 from the profitability, liquidity, and the capital adequacy ratio. The Aeon Credit has shown positive result, which is mean they manage the financial matters either in the terms of asset or liquidity as well. The recommendation on Aeon Credit can consider is based on the return on equity (ROE), which is even all the ratio give a positive result from from year 2021 to 2022 include ROE, but yet if they want ROE more increasing, they should make the best marketing for their offers to all users of credit card. For example, they market their offers through all media social, especially TikTok application. This is because if they succeed with this new strategy, they will approach more people to use Aeon credit service, and this will result in their return. The higher return make an increasing on ROE.